And welcome to this week's halftime talk. We're honored to have back at the table Mr. Anas Al-Hajji, who is well known to many people and was, I think, our first guest in the halftime talk series. And we're delighted, Anas, to have you back again.
Thank you. And I am honored to be the first one, and I'm honored to come back.
Anas, it's been a tumultuous 6 months since we last talked. I don't know where to begin, but nonetheless, over that period since we last talked, WTI went from plus I don't know what to minus I don't know what, and then back up to 40 again. It seems it got stuck there for a while, and finally there seems to be a breakout on the downward side. What's your read 6 months into this crisis and the demand and supply of oil?
Well, generally speaking, it is very clear that there are segments of various economies that are not responding, and they are not going to respond. When I talked about this the first time, I called it the demand trap. The demand trap basically is a case where whatever you do, people are not going to respond, which means that even if you lower prices back to $5 and you lower gasoline prices in the US to 50 cents, those people are not going to move out of their homes. Those companies are not going to react. Those companies are not going to invest. Those airlines are not going to fly. So we've been in a demand trap in the beginning. Then some of that demand trap basically been loosened up a little bit, but we still have a significant portion of it that is still there. So we still have a demand trap, and we need to get out of it. And to get out of it, we literally need a vaccine to get us out of it.
How was the ceremonial end to the US driving season with the end of the Labor Day weekend? Was it a good one? Was it a bad one? Was it a demand trap?
Part of it is, but luckily because of technology is helping, people are talking to their parents and instead of traveling to them. It seems that we have another problem even before the Labor Day weekend. All of a sudden we have this decline in gasoline demand for the last 3 weeks. We couldn't figure out why this is happening. It just coincided with the opening of schools. So there is a possibility that the virtual schooling is forcing families to stay at home during the day instead of going to work or going grocery shopping or doing anything else, because they have to stay with their kids at home. They cannot leave the young kids alone. So there is a possibility that the virtual learning is contributing to that with the beginning of the school year, regardless of the Labor Day weekend.
We saw the oil price, WTI and Brent, essentially locked into a low 40s handle for the last at least 2 months, barely moved incrementally up or down, no matter what the background was. But finally, at the end of last week and the beginning of this week, it has taken a decisively move downward. Why do you think that is, and where do you think it goes from here?
Generally speaking, we got several pieces of negative news, whether on the demand side or on the supply side. On the supply side, we've seen all the news about the increase in OPEC production, and all of a sudden Nigeria wants to redefine what crude is, so it won't comply with OPEC. There were rumors about Iraq. We heard the news about Iranians selling more crude. We heard the news about Libyans selling more crude. So there were several small pieces of news that been negative on the supply side. Then we have the return of some of the US crude that's been shut in during low prices. So on the supply side, we have all those negative pieces of news. On the demand side, we did not see kind of news where things are really picking up. We heard about traffic coming back in China, but we did not see much out of that. We've seen the major increase year over year, the demand in China, but we have to make a distinction between consumption and demand. So increase in demand does not mean much, because they could be storing that oil in strategic reserves. And we know now that floating storage in China is extremely high. We are at almost 88 to 90 million barrels, which is almost equivalent to the surplus in US storage. US storage now is almost 500 million. We needed to go back to 400 million to have a balanced market. So we have almost 100 million in the United States of surplus, and now we have this 100 million of floating storage in surplus too. All of that happened in 1 week.
There's only one place for the price to go, and under those circumstances, inevitably, it's downward. And what about your favorite subject, or one of, shale? How have they figured? How do they look now, 6 months into this crash? The U.S. production, from latest figures I saw, down about 25%, from about 13 to under 10. How does it look to you for shale going forward?
Now it picked up by more than 1 million, simply because they were able to bring back all the, not all of it, but most of the shut-ins. But the issue for shale is there are kind of two stories on this here. That we still have a large number of rigs, relatively large number of rigs relative to the prices and the general situation in shale that are running. So when we talk about we still have 180 rigs basically running, that's a lot, because those rigs are running only in a few days. They are drilling a well. So if you calculate the number of wells, they are still drilling a lot of wells. That's one side. The other side is, all of a sudden, for this month, we've seen major, when I say major, like 4 or 5-fold increase in permits for completing wells. This is very significant. What we are talking about here is, we're talking about wells that have been drilled but not completed, and now they are going back and literally completing them. Those wells are going to bring oil to the market. That's why they are
at
completing
these prices.
them. Correct. So in a sense, the decline in rig count is almost irrelevant at this stage, because the number of uncompleted wells is very large. So if you take the EIA numbers, we are talking about 5,000 to 6,000 wells. I think personally that about half of them will never come back. Some of them are very old too. And out of the remaining 3,000, probably about 1,500 can come back. So we are talking about quarter of the number can come back, about 1,500. They're not going to come back all at once, but we should not forget about them as we go, because probably this is the cheapest way for companies to stay alive.
I want to talk about OPEC. OPEC is 60th birthday is this week, next week, this period of time in September in Baghdad 60 years ago. OPEC have really been the story of the last 6 months, it seems to me, to make an incredible, massive cut. That's OPEC plus, of course, and then to maintain the discipline. You'd have to say, for an organization that was looking a little bit uncertain, they've really come back strongly to celebrate their 60th birthday and still look incredibly relevant. What is your 60th birthday assessment of OPEC?
All right, I have a slightly different view. Probably it's not slightly, probably it's completely on the other side. As you know, the success is OPEC plus, is not OPEC itself. But since we are talking about the 60th birthday, let's go back to the early days. OPEC largest successes were in the 60s, not in the 70s and not now. When we talk about the 60s, there were two major successes for OPEC. The first one is expensing royalties, because companies were sucking the blood out of those countries, international oil companies, and they were counting royalties as part of whatever payments they make for the government, whether in form of taxes or in form of profit or anything else. And those companies looked at it, they said, look, the owner of the land in the United States get 12% no matter what. Whether you make money or you don't make money, in a sense, you have to pay the 12% to the owner of the resources. And therefore, they were able to get that. So they were able to expense royalties, and thus immediately increase their revenues significantly. So that was a major contribution for the organization. The second contribution basically is they, in 1968, they encourage countries to participate in the companies themselves. And so they can be part owner and they can participate in the decision of production and participate in the decision of exports.
And the sort of nationalization of the operational companies.
Well, it wasn't meant that way. Some companies, some countries basically took it to that extreme,
Right.
like Libya and Iraq. Other companies like the Gulf, they started buying shares in the companies. Then the companies decided, look, I have no tomorrow in those countries. And the reason why, because nationalization was on the rise, Arab nationalism was on the rise. We have Iran, Mossadegh already nationalized the oil in 1951. We have Jamal Abdel Nasser in Egypt already nationalized the Suez Canal. And when we talk about the Suez Canal, by the way, we literally have to talk about oil because oil was a major component of the canal for 56 years by that time. So it was related to oil.
The revenue of the canal came from oil tankers passing through.
Correct. So the atmosphere was not helpful for the companies, and the companies told the countries, look, if you want more share, you want the whole company, I will give it to you.
Why are those achievements of those years, are you articulating them to be greater than what was thereafter? Let's say this year, agreeing 6, 7, 8 million barrel a day cut.
Well, we have to make kind of several distinctions here. Historically, OPEC as an organization has no power in the oil market. It was the power of Saudi Arabia and some of its allies. And those allies basically changed over time. So Saudi Arabia and some of its allies, basically, their power was attributed to OPEC. But if you go back, OPEC since 1960, when it was established, there were no quota. The quota system started in 1982, but it failed, and it failed miserably because the market collapsed in mid-80s. And if you go back and read about the problems of OPEC meetings in 82, 83, 84, for example, you will see a headline. If you take that headline and publish it 3 months ago, it will fit. Nigeria basically exceeding its quota. It's the same old headline. Nothing changed. So if we are talking about OPEC as the organization as a whole, it has no power in the market. It was the power of Saudi Arabia and its allies that been attributed to OPEC. The successes we've seen recently in forcing countries to compensate for their excess production in May and June, that came in under the umbrella of OPEC+.
And you think that will be successful? I mean, it's the current strategy. We've kind of leapfrogged 60, 50 years forward. But the big news of the day and next week in particular, given OPEC JMMC meeting, can Saudi Arabia and its allies compel, force the non-performing countries to actually comply?
They already did. But for me, part of my work for the last 25 years, research work, is to focus on the unintended consequences of laws and of agreements. And always when I see any agreement, immediately I jump to the unintended consequences, because that's really where the impact in the market is going to be. And for me, despite the success, which was unbelievable success, because if you ask people about this major cut and the compliance 4 months ago, many people, including me, did not believe it. So there was a major success here. But when we talk about the unintended consequences and we start kind of trying to dissect what happened, we see, for example, Nigeria is saying, oh, I did comply, but you are counting this crude as condensates, and condensate is not counted in the quota. That's part of the unintended consequences, is reclassifying oil as something else.
Well, it's kind of like there's inevitably lots of fudges that go on within the OPEC tent. It's not I suppose it's not a strict army of compliance and discipline. It is a corral of people moving in the same direction, but not necessarily in the same step.
Correct. And if you go back to the older agreement, like in 2016 and 17, for example, you will see people, some countries counted their planned increase in production as a cut. I mean, that's well documented. That's well documented. Yeah. But the idea here is OPEC, if we are focusing on OPEC, OPEC need a modification. OPEC need to be reconstructed. We have to restructure.
Is OPEC plus not a reconstruction? I mean, is it a good thing? Is it a bad thing? What's your own view?
Because even with OPEC plus, we still have many problems. Let's go back and look at the weaknesses of OPEC and where OPEC failed. OPEC failed simply because when they did the quota in 1982, they focused on crude, and they defined crude as anything that is below API 50. So they focused only on crude, which means that NGLs are not included. And they focused on production. That's a big problem, because if my consumption, my domestic consumption goes up in the summer, then my exports go down. In this case, what matters to the market is exports. It's not production.
Well, that's what the organization is called, the Organization of Petroleum Exporting Countries.
Absolutely, but they focus on production instead of exports. So for the restructured organization, let's call it OPEC plus, they need to focus on exports, because we can monitor exports way better than production. They can focus on exports, and they have to include all liquids, not only crude. Because if they keep playing this game of condensates versus crude versus all other liquids, it will lead to failure too. So they have to count all liquids. And the other thing is, to make it more meaningful, they have to focus on crude quality. Because when it comes to the market, what certain refiners want, they want certain quality at a certain price. You cannot just focus on quantity and price and ignore that quality while that refiner is waiting for that crude to arrive.
It certainly seemed the last 6 months that heavy crude was very much the crude of choice.
Correct. And one of the reasons why, of course, because the major decline in demand was in gasoline. And gasoline comes from the lighter crudes. So in a sense, there is a room to improve OPEC plus and improve its efficiency and effectiveness in the market.
I kind of think of OPEC, OPEC plus OPEC as a bit like the United Nations. You know, it's not the most efficient organization on the planet, but what would the world look like if it wasn't there?
Well, there will be one. The world is going to create one. And the reason why, because if you look at the history of the industry, and I wish I prepared a chart for this, but if you guys would like to post it, I would be happy to send it to you, and you can post it when you post the video. If you look at oil prices since the beginning of the industry in 1860 until now, you will see a very interesting trend, that you see massive volatility when there was no manager, and very little volatility where prices are stable when there is a market manager. So we start with Rockefeller, Standard Oil, prices were stable. Then the federal government, the US federal government, broke Standard, and then we've seen massive volatility. And then the Seven Sisters came in, along with the Texas Railroad Commission. Texas Railroad Commission, the reason why Texas Railroad Commission came to the picture, because after breaking Rockefeller, the government itself found out that Rockefeller was very useful. And now they created those entities to do what Rockefeller did, exactly with the same objectives, which is reduce waste, reduce volatility, kind of enhance efficiency. These are the same objectives of Rockefeller. But
one of the things that I would note on that point, Anas, is that in the OPEC period of managing the oil markets, we've kind of had eras during that 60 years. With the sort of Yamani era, which is very much defined as that kind of 70s, the oil embargo, takeover of nationalization and all of those things. Then we had the sort of Naimi era, the 20 years of Ali al-Naimi, the Saudi energy minister, a very strict technocrat, and he seemed to manage, hold a strong stick. My question is, are we now seeing the beginning of a Prince Abdulaziz bin Salman era? And how would you assess his first year in the job?
Before I start with this, I just want to point, since you mentioned the oil embargo.
Please.
OPEC, and we are talking about OPEC. OPEC has nothing to do with the oil embargo of October 1973. And OPEC, that the other organization, the Arab oil producing exporting countries, has nothing to do with it either. That was a collection of Arab countries that led that embargo, but OPEC has nothing to do with it. Now, going back to Prince Abdulaziz era, it is a very distinctive era. And it is very distinctive because, I mean, there could be various reasons, but the alignment between the thinking of Mohammed bin Salman, his half-brother, and his thinking basically played very well. And the question here is, people will ask whether they are carrying a big stick to herd the rest of OPEC, or they have this ability to convince them to do what they want them to do. And that people can argue on both sides, and it could be both. But I've seen Prince Abdulaziz in OPEC meetings in the past, where one group of delegates basically will not agree to something and they will almost ruin the meeting. And he wasn't the minister at that time. And they will send him to that delegation. 10 minutes later, he has a deal.
Quiet.
So it is, I mean, people can argue both ways that they carry a big stick. Yes, they carry a big stick. Whether they used it or not, that's a different argument. And whether they have the ability to convince, and we have evidence to show that they can. What we've seen in the last 2 months in particular, that the ability, that development in OPEC thinking and OPEC plus, of that those countries who violated their quota, they must compensate. That's one level up of what we've seen in the last 40 years.
We've never seen that before. And
Correct.
I'm wondering, can we credit that to Prince Abdulaziz?
On personal
level, he does
level,
seem to be very determined to have full compliance.
Absolutely, absolutely. He is behind that one. And what helped in this case, I mean, let's face it, okay? We are not talking about a usual person here. We are not talking about a public employee, although he would like to be viewed that way as a public employee. We are talking about a guy who's been there in this OPEC building, in a sense, for more than 25 years. You are talking about this impressive experience. No other can match that. That's number one. So when
no one else in OPEC has anywhere close to that experience.
Correct. So if you are talking about OPEC memory, he is OPEC memory.
Right.
Okay, that's number one. Number two, every investor in the world would love to know what the Saudis are thinking and what the Saudi policy is. Well, this guy been there for more than 25 years. So you have the OPEC memory and you have the Saudi policy memory. So yeah, you have incredible experience. And then
he's credibility, I think. The guy has credibility, even though he's placed there by his brother, he is a royal and all of those things, but he has industry credibility.
Absolutely. And add to it that he is a prince and he is the son of the king. And so you put all of those together, it has to, in a sense, it has to give him that success that we've seen.
And would you think it, if you were to define it as the beginning of a new era for OPEC, OPEC plus, OPEC, the last one being Naimi, Khalid al-Fala was in between, and now we have if we do have the beginning of a new era, Yamani, Naimi, and now Abdulaziz, how would you define it? What would be its top three characteristics? I always think of Naimi as technocratic, quiet, and a sense of order and keeping politics out. How would you define?
One of the problems
Abdulaziz?
we have between 2011 and 2014 is that shale has been dismissed and ignored completely.
Yes.
Okay. And these are 5 years. And in a sense, Saudi Arabia and OPEC went through the 5 stages of grief until they come to term with shale. The fact is, one of the main characteristics we see today is the fast responsiveness to anything developing in the market, not only shale. So the major distinction between then and now is this ability to respond quickly. And when I mean quickly like the way we've seen it.
Yeah, but the other big distinction and difference would be that during those years, they were asleep with $100 oil. I mean, it was like, you know, drunk on big bucks.
That's correct, but there were other issues related to that too, because it wasn't only the $100 oil as much as, I really can't, I did not mean to delve into this, but let me put it this way. There were people in the Arab world at that time, and I'm talking about officials in big oil companies, who believed that shale was a CIA Israeli conspiracy. So it wasn't only the price. Right. They were thinking really along those lines that this is because they want this and Israel wants this and the CIA want this, right, etc. So it wasn't only the price. So the main
whatever
distinction,
it was a big miss.
Absolutely, absolutely, because when they cut production in 2012 after the start of the Arab Spring, that was a big mistake. Production should have been at a higher level. Prices would have been lower to 75. And with 75 between 2012 and 2014 would not have lowered the price to the 20s after that.
As we sort of come to wrap up, these half hours always go very quickly. Looking forward, and as obviously this deal, OPEC plus deal, this current one is 6 months, but of course the previous one was 2 or 3 years. So they're kind of 3 or 4 years now in a relationship. Is that now to be defined? This is the new OPEC, and we should see it as thus, that Saudi Arabia no longer has that unilateral authority. It's now a joint venture with Russia, or are these still two separate things, do you think?
Well, you can say all the above. It depends on the level of the crisis, the level of the circumstances, and what's going on, and the level of the price. So it's really all of the above. But I would like to focus on a couple of points to answer your question. The first one is, theoretically speaking, that agreement among OPEC and OPEC Plus basically should weaken, and the compliance should weaken. But I like what
it will or it should.
No, it will on its own, regardless whether it needed or not. But it's good. Okay. Some countries are not going to comply fully. But as Dr. Ramhi, the Omani oil minister, said in a recent interview with Argus, basically, I think he said it in a very beautiful way. He said, look, even those who want to expand production, they don't have money to do so. and he is right. So the limitation that will force countries to comply and will help Saudi Arabia and Russia basically is other countries do not have enough money to spend to increase production. So that's number one. Number two, shale. Shale, we have a serious problem with shale right now. Yes, we are going to see those wells completed and production will come online, but we are going to have this mismatch between investment and the decline rates. As you know, decline rates are very high, while investment declines substantially. And as a result, we are going to see this major decline in shale continuing, at least in the next year and a half to 2 years, because of that mismatch. The problem with shale is not only oil prices, it is oil prices, natural gas prices, and NGLs prices. A rise in oil prices alone is not going to solve shale problem. Because if natural gas prices are still negative at some hubs, we still have a problem.
So regardless of who wins the presidential election, shale and Tex will face a challenge.
Absolutely, absolutely. And what that means is decline in shale production means lower exports. And lower exports mean there will be a shortage worldwide, and the US needs to import more. And that's when we go back to OPEC and OPEC plus. The shale, the major defeat to OPEC from shale came in from the ability of shale to split OPEC into two halves. The ones that lost market share in the US versus those who did not lose market share. And those who lost market share in the US started competing with other OPEC members in Asia and Europe. And that's really what led to the major decline in oil prices in 15 and 16, because shale production declined at that time. It was the OPEC on OPEC competition created by shale that caused the problem. Now with the reversal of production in shale, we are going to see some OPEC producers such as Nigeria and Algeria, and probably Libya in the future, will regain some of their market share in the United States. And that should help OPEC and OPEC plus.
Over what time horizon? Over what time horizon do you think?
We are already talking about it right now. It's already started, and it will be more pronounced probably within 6 to 7 months. We will see an increase in imports from Nigeria and Algeria, and that should reduce the OPEC on OPEC competition and help OPEC basically stay, or OPEC plus, stay together and comply with the lower production cut, of course, by that time.
At some point, they're going to have to start graduating, you would think, those cuts through next year. At the moment, they're right through to the end of the year, and it kind of comes to a cliff edge. But you would imagine they need to probably think about where the exit might be. Hopefully, that becomes the problem. Listen, Anas, we could talk all day and all night.
Absolutely,
you know that.
Absolutely.
And we'll have to find a moment, hopefully in 21, where we can all sit around and have a good natter and reflect on 2020 and the crazy year that it's been.
Absolutely.
Maybe at Vienna at an OPEC
Absolutely.
meeting in the Anna Grand, we can sit down.
Or on the 60th birthday party.
Exactly, whenever that
Yes.
will be. And I'm sure there'll be different OPEC capitals celebrating their achievements in the coming days. But Dr. Anas Al-Hajji, as always, thank you for being on this week's Halftime Talk. It's a pleasure to be talking with you, and have a safe week and return to school and all of those things that you're doing in Texas. Hopefully everything works out well for you and your family. Thank you.
Thank you.